Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. Now, for those of you that's been supporting me, as always, salute. And for those of you that stepped up as patrons, double salute. I really appreciate the support. Now, today's video, we're actually going to be talking about no credit loans and no credit check loans, right? And for a lot of people, they're not even aware of their financial institutions that they're banking with. They actually do offer, many of them do, they start to offer no credit check loans, okay? And it all goes back to the relationship, right? And so we're going to talk about the no credit check loans as well as the no credit loans. But here's something that you have to understand. When you see like third-party lenders and stuff, and they're saying get approved with no credit check. Well, here's the thing about it. What they mean, they're going to do a soft pull and not a hard pull. So they won't be pulling from Equifax, TransUnion, or Experian, right? They're going to be pulling from 3 other credit bureaus. And those 3 other credit bureaus is Clarity. Okay, now Clarity is owned by Experian. All right, then you have DataX, and they're owned by Equifax. All right, then you also have Factor Trust. Okay, and they're owned by TransUnion. So if you have challenging credit, real bad challenging credit, and you may say, well, how come they didn't approve me or whatever? It's not because they put a hard inquiry on your regular credit report. The major 3, what it is, they're pulling these third-party systems, okay? And they're pulling this financial data from those. And those third-party systems is going to let them know should they take a chance on you. Okay, now again, if you're in one of these systems and you're being denied, then you really have some negatives that are going on with your credit and stuff. Another thing you have to understand as well is that your debt to income ratio, that plays a big factor into it. So if you bring home $2,000 and your rent is $1,000, now your DTI is 50%, right? So some of the lenders, they may go as far as above 65%, but again, you're cutting it pretty close. But if you want to know what's going on, if you have bad credit and you've been denied and they didn't pull from the major credit bureaus, these 3 companies is where you need to check, because it's got more data about your financial situation. Okay, so that's the reason I'm sharing this with you, so you can understand why this is happening. Now, let's talk about the no credit loans first. All right, so with the no credit loans, these are companies, again, talking about the debt to income ratio. These are companies that you may have a challenging credit, right? You may have bad credit, but you have a high income, right? So by you having a high income, that will forego the blemishes that are on your personal credit. So one of the ones is Opportune. I think it's Opportune. Excuse me guys if I mispronounce that, excuse me. Opportune, and I'm hoping I'm spelling it right. Excuse me. It says Opportune, excuse me. Opportune is one of those financial systems. Then you have Capital Grant Funding, okay? Again, like I said, these are companies that are willing to work with you. Excuse me, it's not Capital Grant, it's Capital Good. So it's Capital Good Funding. Now, again, these are companies that are willing to work with you, right? Even if you have bad credit, but you have strong income. So these are the lenders that you want to take a look at. Now, you have STILT, S-T-I-L-T. Say that you don't have a social security number, okay? So what they do, they look at your education, your employment status, your potential to generate income and stuff like that. So again, this is a company that's very good. So you may have bad credit, but you have other things that factor into that allows them to take a look at this. Now, here's another one, Navy Fed, okay? Again, they're looking at internal data, right? So where most people are like, well, I got turned down or whatever, again, depending on the relationship with Navy Federal, you may have bad credit, but again, because you may have a high debt to income ratio, you may have a long history with them, with constant deposit, you have a direct deposit. So these are things that they take into consideration. So even though you may have bad credit, or you're just starting out, then Navy Federal does take that into consideration. So it is possible, even if you don't have any credit, to actually get loans with Navy Federal, okay? And then there's Upstart. Okay, this is a alternative, because here's the thing about it. A lot of the alternative lenders and stuff, like I said, they're using these third-party things, so they have more flexibility and they're more open to give you credit if you just starting out and stuff, because they're collecting all these other data points on you to help you out. Now, here's something that if you are just looking for a short-term loan and it's less than, say, $2,000, right? If you're looking for short-term loans and they're less than $2,000, these are the financial institutions that you want to take a look at. You have Freedom First, okay? Now with Freedom First Credit Union, these are the credit unions. We're going to talk about the banks as well. All right, so with Freedom First, they go up to $1,000, but you have to become a member. So just keep that in mind. You have to become a member. Now, for you guys that are in New York, I know with a lot of the regulation stuff, it's hard for you to find payday loans and stuff like that. But there is a credit union. There's actually a couple credit unions, but one of those credit unions is First New York, okay, credit union. All right. Now, here's the thing about it. Again, because you have to become a member, they will loan you up to $1,000. Okay? And that's without actually pulling your credit. Again, going off of the relationship. This is so important. And for any of you guys that ever used First New York or Freedom First or whatever, put a comment below. Let me know. Hey, I've tried them. They worked out for me, because not only will they give you a loan, but it also helps report to help build up your credit. So they won't pull your credit to give you the loan, but when you start making the payments and stuff, they'll actually start reporting that to the credit bureaus to help build up your credit. All right. Then you have Elevate Credit Union, and I think they go up to 800. All right. After Elevate, you have GHS Credit Union. Okay, with GHS Credit Union, they're going to give you up to $1,000. Okay. And again, these are short-term loans. So instead of looking for payday loans and stuff with higher interest rate and stuff like that, these financial institutions are the ones you may want to try to build a relationship, because you have less interest, okay, and you're paying out less money to borrow the money. And again, it's no credit check, just like with the payday lenders and stuff, but you do have to become a member. Now, here's something interesting. A lot of you have heard of DCU, Digital Credit Union, right? But with Digital Credit Union, when you take out like their so-called payday loan or short-term loan or whatever, they give you up to 60 days before you make your first payment. Now, that's what I understand. If any of you all are members of DCU and you use their short-term payday loan or whatever, and let me know, did it work out for you? Did you like it? Or was it just one of those things that it just really didn't benefit you? But again, from their words, they give you up to 60 days to make your first payment. So that's real good. Now here's a major credit union, but they don't give much money. It's Andrew's Credit Union, okay? Now they go up to 500, right? However, like I told you guys, it's about the relationship. Because the more accounts you have open, the more you're able to build with them, the more money they're able to give you and stuff. And because these accounts are actually helping you rebuild your credit as well. Now you have another credit union, which is Metro. Metro gives you $1,500. All right. So those are some of the major credit unions that you may want to consider to do business with, to get a loan. Again, if you need a short-term loan from say a couple $100s to a couple $1,000s, these are the credit unions that you may want to reach out to. Now those are the credit unions. Let's talk about the banks. All right, there are banks that will actually give you a loan, okay, and they don't actually look at your credit. Again, they are looking at the relationship. Now here's one that would surprise me for its banks, and it's Huntington Bank. All right, and you have to be a member with them for at least 90 days, and your deposits have to be at least $750. All right, but they will, if you've been with them for 90 days and your deposits are at least $750 per a month in deposits, they will actually give you a loan without actually looking at your personal credit. It's a short-term loan, smaller dollar amount, but at the same time, if you're in a financial crunch and you're a member with them, then I would definitely take a look at them. All right. Now, you also have U.S. Bank. Now with U.S. Bank, again, they give you $1,000, but you have to be with them at least 1 year. Okay, so you have to be with them at least 1 year, right? So just keep that in mind, where Huntington Bank is 90 days, U.S. Bank, but again, many people are with them. They may need a short-term loan and stuff. It's better to go through them because they're going to charge you less interest, and again, you're still building a relationship. Now you have both a Bank of America, right? So Bank of America is 500. They're going to give you 500, but again, you have to be with them at least a year with your account in good standing. I must also add that make sure that your account is in good standing in order to be able to apply for these short-term loans. And then another one you have is Wells Fargo. Okay, so Wells Fargo is 500. But you have to have direct deposit with them. Also, for you guys that have personal lines of credit with Wells Fargo, it seems like they changed their mind. For some of the personal lines of credit, they're not going to close them down. So which is good, you know, because it will mess up people's credit. So I guess because of the backlash on that, they decided we're not going to be closing down people's personal lines of credit because they understand it'll hurt them more financially than actually help them, right? And it'll hurt their relationship because people started jumping ship. You know, they started finding other ways, and like I told you, being able to get a 0% credit card and transferring that personal line of credit over to that 0% credit card. So that way, again, you have an account open, but you're paying no interest. So that way you're in a better position. So that's the reason we continue to talk about strategy. Okay? Now, if you're looking for more than $2,000, okay? If you're looking for the big money, if you're trying to get up to 50K in funding, all right, and you have bad credit, but you want to do no credit check, here's some lenders. Now, some people don't like this company, and if you one of those people that had a bad experience or had a challenging experience or just had an experience dealing with this company, OneMain Financial, all right, let us know. Put a comment below. What did you not like? If some people said that they wanted to do a title loan with them and stuff like that, they had to have some type of collateral, in which again, I have dealt with them in the past. I never had to put up any collateral, but maybe times have changed. So if you ever deal with OneMain Financial, then put a comment below. Let us know, hey, what was your experience? But they go anywhere from $1,500 up to $20,000. Okay, that's OneMain Financial. Then you have Avant. Okay, and again, they will do not the hard pull on your credit, but a soft pull on your credit. All right, so with Avant, they go anywhere from $2,000 up to $35,000. All right, so now you're starting to see that you have more options than what people are saying. So when one lender is not willing to, or you find out that you applied and this lender said no, then, and they didn't put an inquiry, trust me, these are what they're looking at. These three companies are your major players in terms of finding out what's going on, why you have been denied, right? Okay, so LendingPoint. If you guys use any of these companies and stuff like that, let us know in the comments. Let us know your experience. So they go anywhere from $2,000 to $3,600. That's for LendingPoint. Then of course you have Op Loans. And if you're fresh out of a bankruptcy, they go up to $5,000. But again, they're one of those companies, they don't operate in every state. So if you try to apply and they turned you down or whatever, either they may not operate in that state, or again, since they're using these here data points here, you may have something on those files, and you can freeze these here files as well. So just keep that in mind, all right? You have loans under 36%. Now loans under 36%, they themselves, they go up to $35,000 as well. Okay? So, and then you have M1. And they go up to $50,000. You also have Upgrade, all right? Now with Upgrade, like I said, I have a colleague of mine where he just had a dead file and stuff, and he has a strong income. Although they gave him a low amount, but again, they gave him a trans because he had a dead file. So that's happening to a lot of people. They just have dead files, right? And so some of the things that you may want to understand why you may have a dead file. It could be reason with no credit score. You never apply for credit. That's one of the basic ones. You always use cash. You closed accounts. That's another thing I want to let you guys know. If you have accounts, even if they're small dollar accounts, okay, and they're still reporting, right, do not close them, because if you close them and they have small dollar amounts and they're still reporting and they have history on it, if you close them, that will hurt your history, okay? So you do not want to do that, okay? Another thing that may happen where your file is there is, right, your accounts may be too new. If your accounts is too new, again, you may have like different accounts, like you may have a rent or something like that, or you have a default on a phone bill or something, but you just have some basic accounts, but you don't have any revolving accounts, sometimes you may not even get a FICO score. So that's the difference between your Vantage score and your FICO score. You actually have to have activity going on the FICO in order for it to pick up. With Vantage, it would pick up like with 1-2 accounts, but with FICO, they have to actually be revolving accounts in order for them to pick up, and it usually take about 90 days from their statements. All right, so what they're saying. All right, and then also the credit history. Again, not having a credit history, or the credit history is too short. So meaning, again, your file is just too new. All right. How to fix it in terms of helping you build up your credit? You have card companies out there. Card companies like Extra. And most people use their debit cards, right? And I keep telling you guys, leverage your resources, right? So a card Extra, you hook it up to your debit card, and as you use your debit card throughout the month, all your monthly transactions, Extra will report that. Okay, so that way you get a trade line that's reporting on your credit. So of course you have secured cards and loans. This is very important, because a lot of people may have just a whole lot of secured cards on it, but they don't have a loan. So again, this will also lower your credit. If you don't have that loan on there, it will lower your credit. That's the reason I tell you guys, you may want to consider doing a pledge loan or some type of secured loan with the credit unions. I like the credit unions because they give you more flexibility. All right, so that's the reason that you want to do that. And again, by you taking out one of these small dollar loans and stuff and letting them report, so now you will have those trade lines that actually report. And of course you have authorized users, AUs, authorized users. Then you have credit AI. Okay. So you have more options these days to help you build your credit and stuff like that. So this is Houston with Three-Way Funding. For those of you that just found the YouTube channel, welcome. Please remember to subscribe. And those that always support me, salute.